everyone, it's Ed Leach. Welcome back to our video series on helping dental practice owners with their financial planning. And what I want to talk to you today about, and piggybacking off of one of our prior videos around savings buckets, is talking about cash reserves, which is one of the most often overlooked parts of anyone's personal financial plan because we often just take it for granted. It's basic bank accounts. So there's really three key questions that I'm going to help you answer today. Is one, how much should I have in my practice reserve accounts or my savings accounts? How much should I have in my personal savings accounts? We're also going to talk about what type of accounts you should be using. And the last part is going to be maybe some tips to think about in terms of picking a banking relationship and where you should actually have your accounts. So the first thing that I want to talk about is answering the question of how much should you have in your savings accounts. And first, we're going to talk about your practice. By definition, at least 3 months of your operating expenses, what it costs for you to operate the practice, should be held in a reserves account. That is usually about the minimum that we recommend. Depending on the practice, depending on what stage you're at, it could be more, but usually that's about the minimum that you want to have. Now, how you come up with that number, remember that P&L, that profit and loss statement we talked about? What you want to do is look back over the last 12 months, total up what your overall operating expenses were to run the practice, backing off any one-time purchases or expenses that were really unusual for the practice. And by taking that total amount, dividing it by 12 months, you're going to get what your average monthly cost is to run the practice. You're going to take that number, multiply it by 3, and you're going to arrive at a number that you should have at least in your reserves account at all times in the practice. Now, taking that same example to your personal accounts is by looking at your personal profit and loss statement, meaning what are the expenses, what are the ongoing costs to operate your household. By definition, you also want to have at least 3 months of those expenses set aside in a reserve account. Oftentimes, for you personally, we recommend having close to 6 months as a benchmark. And part of our planning process is to really tailor that to what your preference is on how much cash you have. But for rule of thumb, 3 months for the practice, but somewhere between 3 to 6 months in your personal accounts is usually recommended. So the second thing that I want to talk to you about is what types of accounts should you have? And we're a big fan of keeping it simple. So I want you to think of 2 words when thinking about your practice bank accounts. 1 is operating and 2 is reserves. And we're going to address the operating first. This is traditionally a checking account. It's non-interest bearing. And think of that as the operating account that money comes in your collections and money is going out to pay your bills, your payroll, and things like that. Money constantly coming in and going out. You're not really concerned about how much interest you have in those accounts. You also want to carry in that account a good floor of expenses just to make sure you don't run into any overdraft issues. Now, that's your operating account. You'll also want to have a reserve account. This is traditionally a savings types account or a high yield interest bearing account because the money that you're putting in that is set up for that rainy day, just in case if you need it. You're going to want to make sure that reserve account is interest bearing. And if you ever want to get a quick look to see what interest rates are paying out there, is just go to Google, pop in what are high yield savings accounts, and you're going to come up with a list of the most current interest rates out there just to compare what you currently have. But the most important thing is maximizing your interest on any of those cash reserves. Now on the personal side, you'll also want to remember those 2 terms, operating and reserves. Your checking account at your local bank is going to be your operating account where you keep a small floor of a balance to make sure you protect yourself against overdraft fees, and all of your income is going to be coming in and your expenses for your mortgage, your utilities, your phone bill, all those things are going to be going out. For your personal accounts, those checking accounts are also usually not interest bearing. So you're going to want to have that same high yield savings accounts for all those reserves that you set up for yourself. Because one of the most common issues that we find when clients come to us is they're traditionally carrying a lot more cash in their checking accounts than they should. Traditionally, again, those accounts are non-interest bearing, so they may be missing out on interest opportunity, but also there also is an increased risk of fraud in checking accounts. If a debit card was to ever be compromised, once money goes out of a checking account, it's unfortunately usually lost. So we want to treat those accounts for both the business and personally purely operational. So the last part that I want to talk to you about is picking a banking relationship. Now, if you're a mature practice owner and you've been running your practice for a while, odds are this relationship is already established. But if you're just starting out or maybe re-examining what type of banking relationship you should have, here are some helpful tips that will hopefully guide you through the process. The first is make sure the bank is familiar with working with dental practice owners. You're going to want to make sure their loan underwriting department has familiarity with your industry in case in the future you ever need a line of credit, you want to expand the practice, you want to do a renovation, you want to make sure you can go to a bank that you know is going to be able to work with you and create a seamless process for any type of lending needs that you could have. The second is around convenience. Usually you're going to want that bank to be local. You're going to want to have a banker that's somebody that you can speak to just in case there is ever an issue. Another consideration is fees. Traditionally, bank fees for checking accounts and savings accounts usually are zero cost. You just want to confirm that with the bank, and it's just one of the questions you should ask is, hey, are there any fees that I should be aware of that I could be paying? Another consideration is interest rates. Is any of these accounts interest-bearing? Are they paying a competitive rate to which you could go out in the market and receive? Again, a simple Google search or a question to your advisor is how much interest should I be getting on my savings account is going to be answered for you. One of the best ways to benchmark it is if you look at what a 3-month U.S. Treasury bond is paying, that's about what you should be receiving in your savings account, somewhere in that ballpark. So the last helpful tip is a reminder on FDIC insurance. So if we can remember back to the first quarter of 2023, FDIC insurance was a big topic because we had some small regional banks in the U.S. actually need to be taken over by the FDIC. So that number became very, very important, specifically for businesses. So FDIC insurance on a business account at any individual bank is going to be a total of $250,000 across all of the accounts that you have with that bank. Now, in thinking about it, depending on your practice, that might not be enough of insurance coverage. It's one of the things that we help clients with. There are oftentimes online banks or program banking opportunities to create more FDIC insurance for a business. It's one of the things that we help our clients with. Personally, FDIC insurance is a lot more elaborate. You're going to be able to get a lot more coverage, and it all comes down to account titling. So at a bank, if you have a joint account with you and your spouse, you have up to $500,000 of FDIC insurance on that joint account. In addition to that, you can each have individual accounts for $250,000 each of fully FDIC insured cash. So together, as a couple at a bank, you can have up to $1 million. For an individual, you can have up to $250,000. So those are some rules of thumb. Oftentimes for your own personal planning, you're usually not keeping that much cash because, again, think of cash reserves as short-term money. So thanks for listening. Hopefully we were able to answer those 3 questions around your cash reserves of how much for both the practice and you personally, what types of accounts should I have for both the practice and you personally, and 3, what should you be looking for in a banking relationship. If you'd like to continue the conversation, head over to our website, highlandplanning.com. You can set up a free initial consultation with someone on our team. And lastly, if you're enjoying our videos, make sure you go down below to follow us. Our next video is going to be talking about those long-term savings buckets, which should be a really interesting conversation around your investments. Thanks so much and look forward to seeing you then.